We've sort of had mixed messages from Elon Musk about the cash burn that's going on. And indeed, they didn't seem to paint the picture that they'd be closing down some of their manufacturing units for some sort of break.
Yeah, there have been a couple of different reports out of China and Germany that the plants are going to be offline for a couple of weeks this month. The half glass empty would say, oh, God, this is what a terrible time to be offline, right? They just came off of this sort of bad quarter where production was paused because of COVID. Now they're, shutting down production again. The glass half full would say, well, this is all build back better. Auto companies typically take plants offline, especially around the July 4th holiday here in the U.S., to kind of do retooling, to do equipment maintenance. And you can often get better production after you've had an opportunity to kind of do that. So we'll just have to wait and see what production is like going forward. The company did say that they had a really strong production for June.
Yeah, what was it? 254,695 deliveries for June, which was the most that they've ever made in history. But it actually was still less than the market wanted.
Well, that was actually 254 was the deliveries for the quarter, which was a dip from the first quarter.
Mm-hmm.
But the market kind of expected that because we knew that China, which is their most productive factory, had been offline for several weeks because of the COVID lockdown. But yeah, no, it's definitely a mixed bag. I mean, I think there's going to be a lot of questions about production and the ramp up of the new factories in Austin and Berlin when the company reports earnings July 20th.
Yeah, Berlin, Austin losing billions of dollars right now because there's a ton of expense and hardly any output. Musk seemed to be telling Tesla owners back on May 31st. Is he painting in general a gloomier picture or an upbeat one? What do you think?
Well, I mean, I think he's always been fairly, to his credit, I think he's always been fairly frank about the state of the economy as a whole. And this is a man who is now the longest running auto industry CEO. I mean, he's been the CEO of Tesla since 2008. He steered the company through the first recession, or the most recent recession in 2008, 2009. The company came very close to bankruptcy during the Model 3 ramp in 2018. And it is this dance of you're investing all of this money into getting new production capacity online, but until they're actually producing cars and you're delivering the cars, you're not really making that much money. So I think he's actually gotten fairly good at kind of managing cash and figuring out which levers to pull. Demand does not seem to be a problem, at least at the moment. And Tesla has raised prices quite a bit to kind of cover the costs of higher energy costs and higher commodity costs. And
let's face it, making a lot more EVs than anyone else out there, Dana. Lastly, just the mood music around Shanghai in general, because again, we were worrying about further lockdowns coming from those cities as the zero COVID policy seems very much still in effect. How much are we worried about the longer term bet that Tesla has made?
I mean, I think that, Tesla's footprint in China is so important to the company, and it's also just very important to China. I can't see that they are going to, let that plant, fall by the wayside. I mean, people were living in the plant, in the closed loop system for as long as they possibly could. So, the geopolitical questions about China vis-a-vis the U.S. are always really interesting ones. But no, it's a very strategic plant for the company for sure.